So, hello. I hope everybody's having a great day wherever you are, whatever you may be doing. No trade calls, no recommendations, ever responsible on stuff here for educational purpose only. So, I wanted to do a little bit of a quick tactical update on the SPX framework we've been discussing. So, of course, you could play geopolitical analyst and try and guess what's going to happen in a very unpredictable situation. But again, usually we prefer to just focus on levels. Just keep in mind that the bulls are going to still be talking about the fact that Trump has a master game plan, that everything's going to get solved. So you should buy. You don't want to miss the massive FOMO rip we're going to get as soon as everything is revolved. Sky's the limit. We're going to break through 7,000 and go to a new sky high. The bears are going to say this is a mess. It's not going to get resolved anytime soon. Oil shock, energy shock is going to last an awful lot more. Negotiations are going to keep on going on, kind of like China back in the first term. We still have other issues, whether that's AI job loss, whether that's private credit issues, yada yada yada. We're going to hell. Market's going to puke, yada yada yada. So we prefer to have a little bit more of a structured approach, and so I'll just go through the technicals here. Now, our base case was that I'm not going to go through all the reference points on the charts because you can just watch one of the other free videos. We discuss this in detail, but our base case assumption was that we're going to come back into the 200 DMA and we're going to tag the bottom end of this range, 65.50s, and that's where everything will likely get resolved in terms of the next move. Now, keep in mind that essentially what Trump did on Monday, on the Panic Monday low here, is essentially freeze time, and buy 5 days. So really any kind of action which is stuck inside of the Monday range doesn't really mean anything. What we likely need is, enough information for the market to believe that indeed things are going well, and that means we'll get an impulse to break back above that Monday panic high, or the market internalizes that things are going to get worse and we have enough sufficient info to break below that Monday panic low. Outside of that is just choppy trading inside range. And all in all, it wouldn't be surprising to see the market stay inside that range all the way through the end of the week. Now, obviously, keep in mind, we've got significant gap risk on the Sunday open on Monday. That's just being the kind of nature in all the weeks, all the Mondays. And that's something you'll have to keep in mind in terms of sizing, in terms of, how you structure your trading. However, having said that, going back into this, what do we see? We see a first test of the range low, close below, pop back above. So the fact that it even closed below is a little bit of a heavy sign. What we're seeing here is that on the initial pop, you still have the 200-day and the 10-day being defended. So this shows you that you still have pressure is still on. The tape is still heavy. Again, hard to tell unless we break outside of that Monday range, but right here, this is still heavy. Shorter term, your base case assumption still has to be that, number one, that Friday range is the key, but above opens up a retest of the Trump tweet range high, below opens up that move back into the 61.50s. That's still bigger picture. That's our base case, that before this is resolved, 61.50s have to get tested. Now, what is interesting here, I think, to keep in mind is that even if you put something like a channel and you look at the action off those highs, what do you see? You can see that there's going to be an awful lot of overhead resistance, which is whether you're looking at the standard deviation channel, whether you're looking at the 100-day moving average, whether you're looking at the 50-day moving average, they're all converging back into the top end of that range. So again, it's a choppy area. So right now, the way I would be looking at this is, broadly speaking, and I know that it's a wide range and it's a very tradable range, I would almost argue that this zone is very, very neutral, meaning that unless we break outside this zone, the bulls are not really going to give up. And unless we break back above the channel high, the 50-day, the 100-day, the 2026 open, the bears are still going to be looking to sell rallies. You could force it and say, actually, the neutral zone is all the way up above the 7,000 because the bears will still not really give up unless we get daily closes above that high. But you see the point here. It's just much trickier read to the upside. But at least shorter term, as long as you don't break back above that 2026 open, it's probably, you could still argue for a good case for sell rallies. And that's the way I would be looking at it. No real change. Here becomes a little bit trickier. Back above becomes very, very bullish. And again, below is our bigger picture view that we have to unwind back into those 6150s. Now, one thing which I just say is a little bit of a food for thought, because for now, bigger pig in the medium term going forward, I would say that the outlook should continue to center around this range for now. But just for a little bit of food of thought, keep in mind, Liberation Day lows. If you think about it here, the tariff issues haven't really been resolved. Data is not doing too well. Energy shock, energy markets are likely going to take longer to resolve, even if we do get some kind of a intermediate term resolution. You still have a lot of private credit issues in the back. The market in the back of in the background. Market is no really gung-ho about cut. We're looking neutral. Actually, we've got actually a higher chance of hikes in December than cuts. So would it be so strange that, especially if things go pear-shaped, we trade back into this area? No, I know it sounds crazy, but to me, even back here around this level would still be, all in all, nothing has changed, still fairly neutral. If you're to flip this onto a weekly or even a monthly, you could see that even should we go back into that, this would still be, the big secular bull market is still fully in control. It wouldn't change anything. But I think that the biggest risk here is that everybody, or the talking heads and everybody, seems to be obsessed about catching the dip before everything gets resolved and we rip, and not entertaining the fact that things could get a little bit uglier for longer, right? So I think that's something you have to be careful. If you look at some, I'm not going to go through here, but if you go through all the individual tech charts, Fangman charts, there's some very ugly looking charts out there. Now, clearly, sooner or later, there will be a buy, but just keep in mind that, in the background, there's still an awful lot of uncertainty. There's a high chance that things go pear-shaped before they get better. So I just say a lot of caution. I would say a lot of caution in the overnight sessions, and be very, very careful if you're trading and you're not used to being around the screens. It makes sense to be in front of the screens. And remember, there's an awful lot of gap risks over the weekend. Okay. Hope this was useful. Wishing everybody an awesome one. Talk to you guys soon. Take care. Bye-bye.